Welcome to Informed Investor. Cryptocurrencies have been on a wild ride in recent years, experiencing both meteoric rise and dramatic crashes. One of the first names that comes to mind when we talk about cryptocurrencies is the famous Bitcoin. And guess what? Bitcoin has surged above the 40,000 mark, witnessing an impressive growth of 147% in the past 1 year and also hitting a 19-month high. When we translate it into Indian rupees, one Bitcoin is around 34.5 lakh rupees. Moreover, it added a massive 20 lakh rupees in its value in the last 1 year alone. Cryptocurrencies in general are very volatile in nature because they are decentralized, which means they operate on a network of computers without a central authority like a government or a bank controlling them. Moreover, the lack of regulation and ability to speculate are the reasons for the volatility in the cryptocurrencies. Bitcoin surging above the 40,000 mark and witnessing more than 145% returns makes it the best performing asset class, outperforming other traditional asset classes. What's adding to this momentum is the Federal Reserve expected rate cuts in 2024 and the potential approval of Bitcoin's ETF by the Securities Exchange Commission in the US. This would result in more inflows and give investors easy access to cryptos through the ETFs. Another factor is the anticipation of Bitcoin halving, which happens every 4 years. This event, which is scheduled for April 2024, will reduce the amount of new Bitcoin minted, potentially leading to more scarcity and increased demand. In India, cryptocurrencies have received no clear guidelines as yet, but during the Union Budget 2022 and cryptocurrency bill, it was decided to impose a 30% tax and 1% TDS on gains from virtual digital assets like cryptocurrencies. It's important to remember that cryptocurrencies, including Bitcoin, are still highly speculative and volatile. While there's potential for further gains, there is also a risk of significant losses. Investors should carefully consider the risk tolerance and investment goals before entering the cryptocurrency market. Next up is another asset class that has been shining bright and also hitting an all-time high today. Gold prices ascended above the 2,100 levels and hit a new lifetime high of 2,146 per ounce level. It also rose to a new lifetime peak in the domestic market as well. In India, amid the peak wedding season and festive season, gold prices have hit an all-time high of 63,500 rupees per 10 grams. First, the basic thing to know is gold is an asset which inherently does not yield any interest or income and is purely driven by economic forces of demand and supply. Now let's talk about the factors that are driving the rally in gold. Geopolitical tensions, particularly the Israel-Hamas conflict, have historically driven investors towards safe haven assets like gold in times of uncertainty. The ongoing Israel-Palestine conflict has contributed to increased demand for gold as a safe haven asset, pushing prices higher for the past 2 months. Anticipation of interest rate cuts in the US is another significant factor. The inverse relationship between interest rates and gold prices is key here. When interest rate rises, the opportunity cost of holding gold increases, prompting investors to shift towards interest-bearing assets like bonds, fixed deposits, etc. So there is an inverse relationship between gold prices and interest rates. Conversely, expectations of interest rate cuts can boost gold prices. The fall in the US dollar index from 114 to 103 since September 2022 has also played a significant role. Gold is denominated in US dollars, so a weaker dollar tends to increase gold prices. The inverse relationship between dollar and gold is clear. When dollar weakens, gold prices rise. Gold buying by central banks around the world has been at a historic pace. According to a recent survey by the World Gold Council, 24% of all central banks intend to increase their gold reserves in the next 12 months, as they increasingly grow pessimistic about the US dollar as a reserve asset. In conclusion, gold is indeed a volatile asset class influenced by various factors. While short-term movements are driven by geopolitical events and market expectations, the long-term trend often sees an inverse relationship with the US dollar and interest rates and a positive correlation with inflation. Having said that, this is me, Allison, signing off. Have a great day and stay safe.
Did you like watching this video? Then download our app, Informed Investor, to watch more such informative and interesting videos.
Equity investments are subject to market risk. Read all investment-related documents carefully. Visit www.researchandranking.com